Does your family ever get exasperated with you for stockpiling such things as paper towels, bottled water, or toilet tissue? Well, they certainly can't object to you stockpiling money. Silver, the only money recognized by the U.S. Constitution, and your first 10-ounce bar of pure silver can be had at spot price with no premium by going to sdbullion.com/RP. And when you buy it that way, you'll be supporting Reluctant Preppers as well by going to sdbullion.com/RP. Thanks. Then switch over to viewer.
This is a quick update to thank you for building our number of patrons to 70 and growing on patreon.com/reluctantpreppers.
Soon, when we reach 100 active patrons, we're going to start sending out a 1-ounce U.S. Silver Eagle each and every month to one active subscriber, so you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a returning guest tonight. Rob Kirby, the founder and host of KirbyAnalytics.com, is here with us again on Reluctant Preppers. Rob is a well-followed proprietary analyst. He has a long history in the precious metals markets and is very knowledgeable about the effects of financial transactions on those markets. Rob, thank you for joining us again here on Reluctant Preppers.
Pleasure to be with you again, Dunnigan.
Wondering tonight if we could talk about a topic that's very current in the news and potentially has a big impact coming, and then switch over to viewers' questions later in the interview. First off, you could kick us off with talking about Russia and what they're doing with their U.S. Securities that they've been holding, and why we don't see that the way that that's playing out seems to make any sense.
Well, the Treasury reported, I believe it was last week, that in the most current reporting period, and the data I believe was for April of this year, that Russia had apparently on a monthly basis relieved themselves of one half of their U.S. government Treasury holdings. And I don't dispute the notion that Russia would have dumped half of their U.S. government Treasury holdings given the sanctions that have been imposed on Russia by the Trump regime. But my question is pretty much this, Dunnigan. With the Fed claiming that they're in a rate tightening mode, and with rather substantial holders of U.S. government treasuries like Russia getting rid of half of their treasuries in a given month, why is it that the 10-year bond remains at 289 as it is today? And more specifically, who's buying the bonds? Good question, because who would be brave enough to step in to buy bonds when the Fed supposedly has a complete bias to raising rates? It's sort of like somebody volunteering to catch a falling knife, maybe a very hot falling knife from that's on the planet I live on anyway. So, and being a little bit of a silly behind, I answer my own question with the notion that there still is $21 trillion in missing money at least, and nobody has yet pointed to where this 21 trillion that was created out of thin air. Nobody has, any idea where this money is, and my contention has long been that much of it is housed in the very obsequious and secretive arm of the U.S. Treasury called the Exchange Stabilization Fund. And I do believe that this is a very big part of the reason why, despite record issuance of new debt and rolling over record amounts of existing debt, even when major debt holders of America's debt are dumping, we never seem to have accidents in the bond market. The 10-year stubbornly remains well under 3%, despite the Fed tightening at the short end. And all we've really seen is the 2-year, 10-year spread narrow, which is a harbinger, historically and typically, it's a harbinger of an impending recession, which sort of flies in the face of the happy juice we've been getting out of the mainstream that the economy's doing just great.
Yeah.
and it also flies in the face of the dollar being so strong, as measured by the USDX or the Dixie index. So those are my sort of head scratching items of the last couple weeks, anyway. And I think if we had let's just say responsible reporting in the mainstream financial press, other people would be voicing these same questions and be demanding credible answers from officialdom. But we don't think that'll be happening anytime too soon.
You mentioned Russia having reportedly sold off half of their U.S. Treasury holdings. What about China going forward if this trade friction and potentially escalates into a full-out trade war? Do you think China will dump any significant portion of their U.S. debt, and do you think that will be a bigger impact than whatever happened here from Russia? And will the powers that be able to sop that up as well?
Well, let's put it this way. Last week we just heard about April's numbers. Next month we should hear about May's numbers, and in 2 months we'll hear about June's numbers. The point I'm trying to make here, and if I don't know if I'm doing it effectively or not, is that China might already have dumped their bonds, and we'd be none the wiser, because these things are reported in arrears by the tune or to the tune of 2 to 3 months as the data is collected. I mean, I didn't really notice a big sell-off in the bond market in April when Russia was dumping half of their debt, U.S. government debt. So China may very well have already dumped a substantial portion of theirs, and we wouldn't really know the difference anyway if the world really works the way I suspect it does.
If we could turn our attention to some of the viewers' questions, we have so many more submitted than we'll be able to field tonight, but if they fall into some themes, and if we could treat some of those, you've always been a good sport with this in the past. I'd like to have another go at this if you're up for it.
Sure, let's let her rip.
This one, you've weighed in on your view of Trump as a patriot and Trump as a populist and Trump as trying to drain the swamp and up against a lot of forces there. Here's a question from Don Niespel. He says, if Trump is a good guy, why doesn't he tell the American people to get prepared for the upcoming crisis instead of misleading us with a false narrative?
But that's a very valid question. My guess, Dunnigan, is that Trump really does know how really dire the global financial situation really is. And I do believe that one of his biggest concerns is alarming people or creating a panic situation where there could be he could spark an anarchist type response on the part of the general public if they became aware of the true financial condition of America. As for instance, I don't believe America owns or possesses the gold they claim to. I don't believe that. I do believe that Trump is very aware that $21 trillion has been created and conjured out of thin air. That I'm just going to suggest deep state operators have control of. I think he would be very aware of that. But these are things that it's very difficult to just come out and say, look, the whole system's rotten to the core. And basically he doesn't want to create a panic. And basically he doesn't want to create anarchy in the streets. Because if there is anarchy, basically nobody benefits. And I think what he's trying to do, or at least my best guess is what he's trying to do, it's like talking a suicide candidate down off of a very, very high ledge, and he's trying to do it with aplomb and with kid gloves. Let's put it this way: I look on a macro level, the movements or the negotiating tactics that Trump is using. And it sure seems to me, at least, that he's negotiating frantically. He seems to be trying to negotiate with multiple parties around the world in a very hasty fashion, which tells me that he might very well feel that he wants to be perceived as America dealing from a point or position of strength,
right?
And this strength may be very illusory and may not be actual strength in reality. I think the financial condition of America is unparalleled in human history in terms of how much of a basket case it is, and these are things that need to be dealt with in a very gentle way. So I think he's doing the best with what he has to work with.
That's a very even-handed answer, and you're right about he did say he's draining the swamp, so he admits there's a swamp. But you're right that you got to try approach that in a way that's that you can navigate out of that very precarious situation. We have a different question about how individuals, what forces are outside the control of the powers that be that might cause this whole house of cards that's been so carefully maintained from falling. Marcus Billings asks, most of us know that this economy is smoke and mirrors. What market forces are not in the control of the central banks that could trigger a financial meltdown? Because it seems they can just indefinitely keep pushing fiat into the asset classes that they choose, and that the man on the street would not even be aware of the loss in buying power.
Okay, well, you make the comment that people are aware that much of what gets reported on our economy is smoke and mirrors. And when you make reports, and I think we might have touched on this in our last interview, when you consider that over the past 10 years, median income in America has gone from 50 to 59,000 over a 10-year period, and I made the comment to you that 10 years ago, $50,000 would purchase 23,000 pounds of ground beef, but today $59,000 only purchases 16,000 pounds of ground beef. So more money is buying less. And that is classic symptom of monetary debasement. And that's how monetary debasement actually manifests itself in the real world. More dollars buying less. Living standards are being eroded. Quality of life is going down, not up. And this is something that I'm going to suggest is beyond the control of central banks, because the central banking community that's in existence today is committed to Keynesian monetary economics. And this is a system that by its very design is guaranteed to fail. And, this was put forward to John Maynard Keynes back in the day when he was advocating his Keynesian, monetary policy. And it was stated to him, like, mathematically, that the system that you are invoking here and the system that you're an advocate for, it ends in catastrophe. And Keynes just brushed off the comment and said, well, in the long run, we're all dead anyway. Well, we're approaching the long run. Here we are in the long run. And the financial system has never looked shakier, and it will continue to get more shaky, because what we're witnessing on a first-hand basis is Keynesian monetary policy, namely fiat money with compound interest, has a life cycle. And we're in the very, very late stages of the life cycle of our current fiat money regime right now. So it doesn't really matter what policies are adopted by the current central banking construct. There's only one way this ends, and betting for this to continue a great deal of time longer is sort of like betting somebody who's 110 years old is going to live another 30 or 40 years. And it's not a very good bet to be making. At least I don't think it's a prudent bet to be making.
It sure can be tempting near the end of a bubble to feel like you don't want to be left out of that perpetual growth cycle that seems to be going on and on and on. All the powers that be sustaining it, and people want to be in on that. They don't want to miss that ride. But it's
of course, the amount of euphoria one gets, Dunnigan, from riding something that's going up vertically, it's a very exhilarating ride. But when things are going vertical, it's usually a good time to step aside.
This is a related question to that point. This is from Chester Kendra. In your opinion, Rob, do you think brokerage houses like Waterhouse will survive the reset/depression we are expecting? If they go under or are in difficulty, what happens to our stocks? How can we prove ownership and claim the shares we own of viable companies?
That's a very good question, and I can't say I truly know the answer to it. I think we will experience a time at some point in the future where banks will be closed for a period of time. It's referred to as a bank holiday. And I do believe that once we have a bank holiday, the prospects for equity markets on a go-forward basis, should we experience a bank holiday, my guess would be that the minute equity markets would reopen after the bank holiday, equity markets could be very, very different than what we know them to be today. I'm not long any. I don't own any equities, and I'm not a believer in owning equities. And I'm well aware that equities have gone up. I've watched. I guess at the depths of the financial crisis in 2007-8, the Dow got down to roughly, I think, 6,000. Today it's at 25,000. But that doesn't really mean that much to me, to be honest with you. I mean, I started writing about and talking about gold when it was under $300 an ounce, and it's been to $1,900 an ounce, and it's currently around $1,275. So which of all these things do I think has the best prospect going forward? I'll put my chips on physical gold again. I wouldn't want to be owning the equity markets so much at these levels relative to other things. And you see, and I'm kind of sort of hedging my bets in saying that, because if we truly have a hyperinflationary blow off top, which I feel is coming, we might very well see, in nominal terms, the equity markets could go up. Just remember, in Germany, back in the 1920s, when they experienced their Weimar event, equity prices went up. Housing prices went up. But they didn't go up anywhere near the magnitude of real tangible stuff that was let's just say, equities did not fare nearly as well as precious metal, and did not fare nearly as well as like the price for staples like food. So there again, you're back into this conundrum of which is better than what. And at the end of the day, you're probably going to serve yourself the best if you have a diversified portfolio and you have a little bit of everything, so you cover all your bases if you're capable of doing so.
This might be related. This was from the viewer named Cheese. Waiting for the reset is like waiting for the music to stop in musical chairs. You're intently poised to pounce, though with no means of timing the critical event. What are the most important steps one can take to increase the chances of having a seat when the music stops? Maybe you've just answered that for us.
Well, it's another metaphorical comparison, Dunnigan, and it's much like this. It's like buying fire insurance for your house. If you buy fire insurance for your house and your house doesn't burn down this year, does that mean you should not renew your fire insurance policy next year? My suggestion would be pay your premium next year, especially if you live in an area like maybe someplace out in California where the Santa Ana winds and have been known and have a track history of burning. I mean, because what we're really talking about here is the life cycle and the health of a fiat monetary system. And fiat monetary systems have had a perfect record over the years. hundreds and hundreds of them have all failed. So they all burn in the end. And this one's very long in the tooth. And betting that this one won't burn in the end is it's quite a bet to take if you if you have the penchant to take it. Frankly, I don't.
We have another question here. This brings it down to the personal level from Steve W. He says, there are a lot of macro signs of an economic crisis, but what are some of the smaller ones? This is so that you've already answered, I think, part of that with you talking about purchasing power and food prices like ground beef and so on. Are there other smaller examples of economic crisis?
Other signs are the rest of the world, namely China, Russia, Iran, Venezuela, Japan, even to a limited extent, and maybe even to a bigger extent. India, these are Brazil, Argentina. These are all countries that are getting involved certainly at least on bilateral basis with other countries, conducting trade in other than dollars. And this is in things that used to be the exclusive domain of the petrodollar in terms of settlement. So, not paying attention to your surroundings is unadvisable.
And that's more of the macro picture as well. And then when people do take up a defensive position by buying some self-insurance, such as physical precious metals, this question is about storage risk trade-offs. El Galinazao 310 said, "Hi, Rob. In a recent interview, you said that if PMs are not in your personal possession, you're at great risk when the crunch time comes. While I have half of my modest holdings of silver in 1 ounce coins in my personal possession, I have the other half with a bullion vault in their Singapore vault in the form of allocated bars, each one numbered and registered to my name. Do you think this is risky?"
Do I think it's... let's put it this way. I think it's riskier than having it under my own control. My view towards owning precious metal is the fewer people or institutions you have between you and the physical metal, the better off you're likely to be. If you're asking me, do I give a seal of approval to somebody who I've never met in Singapore? No, I can't do that or endorse it. It may very well be very secure, and these people may be very honorable, but then on the other hand, perhaps they're not. And I mean, how is one to really know? How is one to really know how how a third party is going to react in a crisis? I have a pretty good idea how I might react, but how another entity may react is I just really can't guess. And and I guess each individual has to make their own decision, as to what they're going to do. But at least I do respect the notion that the listener has diversified. They don't have it all in one pot. So and there may be merit to having it spread around. So there you go.
This one is a little different question in a similar realm. It's from Gary Still. Gold and silver now derive their price via paper markets. Because of this, will gold and silver plummet short term during the next crash, along with all other paper assets?
The paper price may crash, but my question would be, will there be any physical obtainable at the artificially induced price? And we have seen in the past when the price of metal has come under extreme pressure, we've seen the premiums for physical blow out dramatically. And this could happen again, really creating a two-tiered market where the paper price is reported. Listen, I could ask or answer this rhetorically by saying the government tells us that inflation is between 1.5% and 2% a year, but we have alternate measures of what inflation really is by the likes of John Williams, to name one. And he tells us with his work that inflation is really 8 or 9%. So, so I guess my answer is, could the paper price crash? Sure, it could crash. Does that mean that you'll be able to buy more metal at a reduced price? I wouldn't bet on that. But also, does that mean that some individual, if they feel that you're desperate and you need to raise fiat money for some reason, and if they want to buy, or if you're looking to sell some, they're gonna point to the artificial price and say, that's the price you should give me, your physical for. And the person holding the physical might say, well, the heck with you. I'm not selling my metal at that artificial price. And so listen, there's no guarantees. There's no guarantees when the world goes through a financial reset. And frankly, I think we're in the midst of one right now, because I think it's all happening around us, and we're so close to it, we just don't recognize it.
Yep. And this question may be another sign of that connection you're talking about. This is from Lisa Olberding. The Financial Stability Board, or FSB's Global Systemically Important Financial Institutions, or GSIFIs, has decoupled from the S&P 500 and the NASDAQ since the beginning of 2018, and we're entering a bear market down 18%. What impact will this have on the markets going forward, as well as the financial system as a whole?
It's another very good question, and that is a, I guess the person who would probably be in the best position to answer that might be Mario Draghi, the chairman of the European Central Bank. The way the question was framed, it was framed from a Eurocentric construct. Mr. Draghi has basically got the power to act in a certain respect. He has the ability to act as God, because he has the ability to monetize or to breathe life into. I'm going to say bonds issued by institutions that are or might likely be insolvent. And I mean, he has the ability to literally perform weekend at Bernie type activity, taking assets that nobody else in the world would dare buy, and he can inject life into them like he's reanimating a corpse, and have them do dances and have them stand on their head in the corner if he so chooses. I don't recommend this as a prudent course of action on the part of any central banker, but central bankers seem to be quite full of themselves and seem to think that their quantitative easing and their money creation activities make them somewhat superior to us. But I would recommend most people to remember that central bankers actually are human beings, and they bleed just like the rest of us. So, good question, and it's a tough one to answer.
It's ironic that today in the news we had the Deutsche Bank, a lot of people resigning from the Deutsche Bank and everything because the upcoming qualitative portion of the stress tests from the West doesn't looks like they're poised to fail that again this year, as they did in a couple earlier years. And they said that in the earlier years they were able to re-inject enough liquidity in there to sort of prop up and get them to pass the quantitative portion of the stress test, but that once again they may fail the qualitative portion, which is their overall risk posture and that sort of thing. And when you talked about injecting life into walking corpses or whatever, it made me think of the fact that it just got announced today about Deutsche Bank being poised to fail the stress test upcoming.
Oh yeah. Well, what I find even more incredulous is that American banks, of course, never fail stress tests. American banks are always deemed to be very, very strong and very healthy, just like the dollar. The dollar, of course, is very strong, even though the 2-year, 10-year spread is narrowing, which is a harbinger of an impending recession or a depression. But hey, everything's good. Don't worry. The American banks are fine. And of course it's the big bad European banks that, of course, they're the ones that have all the problems. You see, because American banks are immune to those kind of problems. right? Because the American dollar, of course, is strong, right? So, people can believe whatever they're inclined to believe. I look at it from the standpoint, Dunnigan, I know I've been outright lied to about so many things from officialdom that I take everything they say with somewhat of a grain of salt. And when I hear officialdom telling me that the American banks are in great health, and it's just the European banks we have to worry about, and then when one considers the way all banks internationally are intertwined through derivatives trading, it's a big daisy chain, okay? And another way to describe the financial daisy chain in the global financial system is to say they're all lined up like dominoes. And for American regulators to say that, the dominoes that are lined up in Europe, if they fall over, it's not going to affect all of our dominoes that are lined up beside them. It's ridiculous and it's preposterous to make such a statement. And the global financial system is not nearly as healthy as we're told. Full stop, end of story.
We experienced that personally, and our people on our channel have probably heard me talk about the losses that we suffered following the 2008 collapse. We had no investments at Lehman Brothers, but we found out that our reserve fund that we had at TD Ameritrade was collaterally damaged by the collapse of Lehman Brothers, and so we weren't able to. Our account was frozen. We weren't able to access our money. So there absolutely are connections that do affect the ordinary person when that kind of upsets happen. There's one last viewer question, if you have time, and that's from Crypto Daddy, who said, Rob, excellent info and commentary. Please reflect on the latest ESF statement, Exchange Stabilization Fund, I assume that means, on cryptocurrencies. They feel they do not measure up to fiat.
That was actually, I believe, a statement by the Bank for International Settlements that made that comment, negative comment towards cryptocurrency. Let's just say this. The BIS is in the business of making fiat money look pretty and look like it's the best thing in the world. Talking to the BIS about cryptocurrencies would be like talking to John Maynard Keynes and trying to convince him that the gold standard is the right way to go with monetary affairs. John Maynard Keynes would never admit that the gold standard is superior to his Keynesian monetary claptrap, nor would the BIS ever endorse cryptos over their beloved fiat money regime. So the wolf by its suit.
And finally, we have not a question but a comment from Bert Trim, who says, "This isn't a question. Please let Mr. Kirby know what a great job he's been doing at keeping us on our toes. Glad you're having him on your show. He's always such a positive personality to listen to. Thanks for your work, Rob." Bert in Canada. So that's one of your compatriots there.
Thanks for that. Anyway, I believe in talking about what we're facing in real terms, discussing it in real terms, because I believe that there is power in knowledge and being aware of your surroundings and having a grip on what's coming. I think it's calming and soothing, and I'd rather be informed than misinformed.
Well, we're certainly grateful for your presence with us, Rob. You're one of the most sought after of our guests. People, if I don't get you on as often as they let me know it, and we're glad to have you back. Remember, viewers, as always, feel free to comment down below, and if there's any questions that you wanted us to ask Rob in the future, go ahead and leave those. Don't forget to subscribe if you haven't, to like the video if you liked it. And Rob, any parting thoughts for our viewers before we let you go?
No, it's, my view remains the same. If as much as you have the ability to do so, stay long and strong, physical metals. And I know it's been a very trying market, but like I say, don't cancel your fire insurance because your house didn't burn down this year.
And speaking of this year, we are recording this on Thursday, June 21st, 2018. So we will be back with Rob Kirby at our earliest opportunity, and his And thank you, Rob, always for joining us here again on Reluctant Preppers.
My pleasure.